Hey everyone, welcome back to Corporate Decoder, the place where we uncover the hidden stories within company filings. Today we're diving into what Traws Pharma Incorporated has been up to, and let's just say it involves a bit more than just a routine executive shuffle. Stick around because we've got some interesting votes and plans to dissect. Before we dive in, be sure to hit that subscribe button if you enjoy getting distilled insights from these complex corporate documents. Also, our Discord community is linked in the description if you want to chat with fellow enthusiasts about these filings. Alright, let's get straight into it. We're looking at a Form 8K, which basically signals that something important has happened with Traws Pharma Incorporated that the public needs to know about. And in this case, significant events unfolded at their annual stockholder meeting on the 21st of November 2025. The first big piece of news is about their 2021 incentive compensation plan. Essentially, the company's plan for giving out stock options and other bonuses to employees has been updated. The big change here is they're increasing the number of shares they're allowed to hand out by a whopping 1.5 million shares. They've also extended the plan's life until the 20th of November 2035. This tells us that Traws Pharma is looking to incentivize its team and retain talent for the long haul by giving them a bigger stake in the company's future success. This plan was initially approved by the board and then, crucially, by the stockholders, which we'll get to in a bit. Now, for the really interesting part, the actual votes from the 21st of November meeting, it seems like a decent chunk of shareholders, nearly half of the outstanding shares showed up virtually or by proxy. So enough people were there to make the votes official. First up was the election of 7 directors. All 7 nominees were approved by the stockholders. Looking at the numbers, Iron Dukes, Werner Cortrials, Trafford Clark, John Lehman, Nikolai Savchuk, and Teresa Shoemaker. And Jackie Stover all received a solid majority of votes for. For example, Iron Dukes secured over 2.3 million votes in favour. This shows a unified front in leadership for the coming year. It is pretty standard for board elections to pass handily, especially when the board approves the nominees. Then came the vote we mentioned earlier, Proposal 2, the increased stock incentive plan. This also passed with overwhelming support, over 2.1 million votes for it. This confirms that shareholders are on board with giving the company more flexibility to reward its employees with stock. Proposal 3 was an advisory vote on executive compensation. Think of this as a say on pay vote. Stockholders approved the compensation packages for the top executives. The numbers here are pretty strong with over 2.2 million votes for. This means the shareholders are generally happy with how the executives are being compensated for their work. Following that was Proposal 4, which asked shareholders how often they wanted to vote on executive compensation. The majority opted for a vote every 2 years, with nearly 2 million votes supporting that frequency. This suggests shareholders want to strike a balance between oversight and not having to vote on compensation every single year. So, expect the next say on pay vote in 2027. Proposal 5 was about ratifying the company's choice of auditor, KPMG LLP, for 2025. This is another standard item on the agenda, and it passed with flying colours. Over 3.3 million votes were in favour. Having a trusted auditor is crucial for financial transparency and investor confidence. Finally, Proposal 6 was a contingency plan to adjourn the meeting if any of the earlier proposals didn't get enough votes. Thankfully, this was not needed because all the important proposals passed. Even though it was approved, they didn't need to use it. So what does this all mean for Traws Pharma Incorporated? On the surface, it looks like a very smooth sailing annual meeting. The leadership team has shareholder approval for their incentive plans and how they operate. The increased share pool for compensation suggests a focus on growth and employee retention, which is often a good sign. It signals that the company wants to attract and keep talented individuals to drive its future success. However, we always want to dig a little deeper. The fact that they needed to increase the share pool so significantly and extend the plan's term hints that they might be anticipating a period of significant growth. Or perhaps they've had some key hires or retention challenges they are now proactively addressing. Also, the fact that Proposal 4 for a biennial advisory vote on executive compensation passed with such strong support means shareholders are looking for more efficient ways to provide feedback, ensuring a balance between accountability and practicality. All in all, Traws Pharma Incorporated seems to be aligning its employee incentives with its long-term strategy, and shareholders are largely on board with these plans. The strong approval ratings across the board indicate a healthy level of trust between the company and its investors, at least for now. There aren't any glaring red flags here for this particular filing, but as always with any company, we'll be keeping a close eye on their future performance and how these incentive plans play out. Alright, that is our breakdown of Traws Pharma Incorporated's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think increasing the share pool is a good move? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.